21st Century Bet.
Welcome to 21st Century Bet. We are the first derivatives trading platform for sports bets. This is a photo of my housemate back home in Australia. We used to bet on everything. It started with sports, but we became so creative with it that we built our own betting board at home so that we could make bets about our friends and record them. I've been betting at the bet shop across the road from my house since I was 14 years old, and this is not that uncommon a story where I'm from. Now, this pastime developed into a passion for trading financial markets, and I've always found myself comparing the two industries because betting on a company's performance is so similar to betting on a sports team's performance. But each industry has their own deficiencies. I used to trade with IG, and the profitable opportunities you can expose yourself to with small amounts of capital and leveraged products is huge. But unless you love financial statement analysis or looking at line charts, it's just not that entertaining. All right, it's a 5 out of 10. I bet with Betfair, and the products that you use to trade bets are like financial services 30 years ago. It's not proper trading, and you can't use financial leverage. However, it's really entertaining because sports are great. What I've always wanted to do is take the profitability from financial trading and the entertainment of sports betting and put it together to make a perfect 10. And so that's what we did with 21st Century Bet. And we did it by bringing financial derivatives to sports betting. Here's an example of a sports futures. Will Manchester United win the Premier League next year? I want to bet on that for a period of 1 month, and I want to bet $500. And it's known that in 1 month's time, this might be worth $550, it might be worth $450, but not much more or less. What that means is I only need to put up enough money to cover my losses. So that's $50, and I gain $500 of betting power with only $50. That's the leverage effect. It doesn't exist in sports betting because with current products, it causes too much risk to firms. And this isn't just for football. Do you know what the most common bet trading strategy is? It's horse racing. The last 20 minutes before the start of an event. These markets are hugely liquid, they're not that volatile, and races occur every 2 to 5 minutes throughout the entire day. These kind of markets would benefit hugely from our products, which also include options, swaps, and binary derivatives. This is a demo from our prototype, and I emphasize prototype because I know that it's still really ugly. But what you can see is a financial tool to trade bets. So you can see your running profit and loss, you have working orders at the bottom, you choose your products, but then you bet on a sport. You can look at analysis, and then when you bet, we will calculate your margin requirement automatically, and you can enter stop losses and limits to lock in your gains. What's our business model? Well, we're market makers, so we form the opposing side to client transactions, and we offset the risk in other betting exchanges and over-the-counter markets. Like this, our liquidity is as large as a global market for any event. We take revenues from spreads and from a 5% commission of winnings. We're entering a $15 billion US market for online sports betting, which is growing, deregulating. Betfair, the current leading platform for trading bets, has over 4 million users and processes more transactions per day than every European stock exchange combined. This is our ask. We've got a feedback-tested business model and prototype. We have contractors and suppliers ready to start building, and we seek 600,000 euros to conduct a full launch of the firm. Where does the money go? Well, this graph shows revenue per client and the tiny market traction required to break even on investment and the huge revenue that's possible with any proper market penetration. The best thing about it, We used analysis from revenue per client from Betfair, which is 120 euros per client. The kind of products that we offer encourage the type of trading strategies that people use in IG, and they take 3,000 euros per client per year. This is the team. I'm Jake List. I was involved in another startup, blanklabel.com, to the tune of 1 million in revenue, and my key advisor is Mark McGuinness. He has 20 years of industry experience, was the head of betinternet.com as marketing head for 4.6 million in profits, and he was head of marketing at BetDAC, the second largest betting exchange. I'm just going to finish with a little bit of client marketing. This is a quote on sports betting from one of my favorite entrepreneurs, Mark Cuban. And what it says, there really is far better information about your local sports team than there is about any local business in your market. And you should think about that next time you're about to make a financial investment.
My first question is it legal?
Interesting question. So one of our main competitive advantages is that our products are definitionally regarded as contracts for difference. And what that means is that we're classified as an investment firm rather than a gambling firm. And this reduces the regulatory and taxation burdens for us substantially over our competitors. Firms like Betfair actually aren't even legal in Spain at the moment, but we would be. Having said that, our key target market is the UK.
And at this moment in time, have you talked to people like Betfair? I mean, what they think about it? Or you haven't talked to any one of the players?
We've talked to a lot of people about the project other than our main competitors. So the relationship that we form with Betfair will be interesting because we have the potential to bring back a huge amount of liquidity into their betting exchange, but potentially somewhere down the line, they would want to copy our model.
Are you going to develop the tools from the scratch, or are you going to use financial tools that you can adjust to what you want to do?
So Aetna Software make large portions of the trading platform for Saxo Bank, and we've developed a relationship with them to build the product. They also make betting products as well as financial tools. So they have between 80 and 90% of the product that we need ready. All we have to do is take our data supplies and the prices for our products and enter them into the system and put our interface on top.
And how are you going to share the revenues with the people that provide you with customers? I mean, are you going to share revenues? How are you going to do the model?
So one of the major marketing tools for these kind of companies are affiliate programs through the internet. So you buy real-time advertising space, but you generally have revenue share agreements with your affiliate providers. So an affiliate is a similarly related website, and they will take a portion of your revenue.
But I'm on the board of a company in Germany that has people on the betting industry. We have about 50,000 customers. If I tell you I want to offer that to my 50,000 customers, what would be your proposal?
Then I think we should go have a meeting where all these people aren't present and talk about it in detail.
Okay.